Hello everyone. This is the Nasdaq price action while Fed chairman spoke. Crashed over 700 points, 3.5% drop in one single session. Then in response to that, this is our GIFT Nifty price action at the same time, down near 400 points. So these two graph itself sums it up everything what happened last night. However, in this video, first let's discuss what Fed chairman said and what caused this sell-off, all those in detail, and then we'll move on to a regular pre-market report for today, 19th December 2024 for the Indian stock market in terms of Nifty and Bank Nifty. In one simple sentence, it was an absolute nightmare come true. As expected, Fed cuts the interest rate by 25 basis points to 4.25 to 4.5% from the previous 4.7%. In Fed language, that is 4.4%. This was expected, but the problem was the other guidance and explanations given by the Fed chairman during the press conference, which pushed the market down. If required, please pause and have a look. This is the long-term Fed interest rate projection, end of 2025, end of 2026 and end of 2027. As we see here in the first row, the earlier September interest rate projection for the end of 2025 was 3.4%, but now it increased to 3.9%. For comparison, the current interest rate is 4.4% as we discussed earlier, which means what Fed chairman said, in the next 1 year for the whole 12-month period, they are going to perform only 2 more 25 basis point interest rate cut and not the earlier projected 4 25 basis point interest rate cut. In fact, those 4 25 basis point cuts will now happen over 2-year time period, not 1. Then over 3 years, there will be 6 25 basis point cuts. So the interest rate is not going to come down quickly and there is no visible timeline for the earlier low rates of 1 to 2%. This is one of the main reason for the market fall. Then the second main reason, if required, please pause and have a look. This is the graph he showed in the press conference. At present in 2024, the average inflation is around 2.4%. Fed chairman projected that in 2025, the average inflation will increase to 2.5%, meaning inflation won't reduce for the whole year. By the end of 2026, he predicts the inflation will cool down to 2.1% and in 2027, it is expected to achieve the target of 2%. This is the second reason why US market fell, very persistent inflation. Then finally, third reason, it's just profit booking. I mean, if not the last 2 days profit booking, year to date, Nasdaq increased 36%. Think about it for a second. Major index increasing by 36% and the coming Friday is quadruple witching day where all the US derivative market expires at the same time. This happens only 4 times a year, as I have mentioned multiple times in our regular pre-market videos. For US traders, the calendar year is the fiscal year. Hence, profit booking played a major role in yesterday's negativity. So, those were the 3 reasons why the US market was down massively yesterday. Other than that, I watched the Fed chairman's press conference fully. If anyone is interested, please take a look. I will attach the link in the pinned comment section. I don't think Fed chairman spoke hawkishly. He explained that the persistent inflation is mainly due to the housing sector not slowing down, while non-housing service and goods inflation dropped below 2019 level. Then economic-wise projection, unemployment rate is expected to maintain low 4% beyond 2027 and US GDP expected to grow above 2% beyond 2027. In addition, he said there is no sign of a recession. So in one word, to summarize the Fed chairman press conference, it was neutral but market reacted violently. To be honest, this behavior isn't new for December month. A year ago in 2023, the market reacted very positively and yesterday it was the opposite. Anyway, because of the highlighted 3 reasons, US market crashed yesterday. Dow Jones fell 1100 points or 2.58%, S&P 500 dropped near 3% and Nasdaq was the major dragger, down over 3.5%. Just for info, 3.5% drop in one single day, the equivalent Nifty value is roughly 850 points crash. And please look at the VIX, which increased by 74%, moving from around 15 to about 27. As we discussed earlier, in line with the US market, early morning today, GIFT Nifty also dropped below 24,000 mark. So for now, equating that with the spot market, it's indicating gap down opening of 380 to 430 points. Regarding Indian ADR, the story was not so different. All dropped around 2%. In comparison, yesterday both banks in Indian market dropped only around around 1% and both IT stocks in fact closed positive. So now even the arbitrage difference is indicating the negative 2%. Reliance GDR didn't indicate any as it closed in the European market before the Fed chairman speech. I hope Reliance won't fall much today as I bought January month expiry 1200 call option last Tuesday for 76 rupees. Now it looks like a big mistake. Anyway, those were the events in the US market last night. Now regarding the Indian market. Yesterday in the index future market, both FII and proprietary traders reduced their long positions significantly and increased the short positions massively at the expense of retail traders. Then in the index option segment, retail traders were the mega net call option buyers. As we see 7.4% difference on Tuesday end, the difference of open interest once the market up increased to 8%. On the other hand, both proprietary traders and FII increased their negative stance. They clearly want the market down. So from an open interest analysis point of view, it looks like a bad day for retail traders. As a summary, US market crashed and GIFT Nifty and Indian ADR are all indicating massive gap down. Let's hope the downtrend correction is minimum as the Indian market didn't increase like the US market and also it has already corrected significantly. But please be cautious and always expect the unexpected. About the things to look out, before our market opening at 8:30 am, Bank of Japan's industry decision, which is a significant macro event that can influence the global momentum. In fact, in 2023, US market improved global momentum, but a week later, Japan's industry decision damaged the positive run. Then during our market time, Germany's consumer sentiment index is due at 12:30 pm. Finally, after market hours, UK GDP growth data and Bank of England's industry decision are still released. For US, their weekly jobs data, Philadelphia Fed Manufacturing Index and existing home sales data are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 40 points gap down and dropped to an intraday low of 24,150 and closed near 24,200. Thus on the daily chart, Nifty formed a bearish candlestick pattern with an upper shadow indicating selling pressure at higher level. In addition, it maintained a lower high lower low formation for the second consecutive session with RSI and MACD momentum indicators showing negative crossovers. Furthermore, Nifty fell below all key moving averages and midline of the Bollinger Band, all signaling more weakness. One positive aspect is that the weekly PCR put call ratio reached 0.55, its lowest ever level, indicating oversold condition. Hence, we can expect a bounce back in the coming sessions, but I doubt it will happen today. However, in the short term, if Nifty holds 24,150, a rally towards 24,500 can't be ruled out. If it falls below that level, technically 24,000 to 23,900 zone is the one to watch. Now, based on GIFT Nifty, it looks like it might open below the present support point, which might accelerate the selling. Then, in case of Bank Nifty, it opened 140 points gap down and underperformed Nifty, closed around 52,000. Thus on the daily chart, Bank Nifty formed a long bearish candlestick pattern with a lower high lower low formation for another session. In addition, it dropped below the 10, 20 and 50-day exponential moving average as well as the midline of the Bollinger Band with RSI and MACD momentum indicators showing negative crossover, which is a negative sign. Hence, the resistance zone is around 53,800 to 54,460 while support expects to be at 51,600 to 49,600 range. Regarding the weekly options data, the maximum call option open was at 25,500 strike, followed by 25,000 and 24,500, with maximum new call option rating at 24,300 strike, then 24,200 and 25,500. On the put side, the maximum open was at 24,000 strike, followed by 24,200 and 23,500, with maximum new put option rating at 24,200 strike, then 24,150 and 24,000. Thus, from options data, 24,000 is likely to be the immediate support. Then the next support was at 23,500 with resistance on the higher side at 24,500. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.